Winston and Felix here live. And look, the stock market is more overvalued right now than it was before the dot-com bubble burst. Literally, where every traditional metric, we should be in the middle of a massive crash, but instead we're watching the market hit new highs week after week after week. And the uncomfortable truth is that the banks and Wall Street don't really want you to understand it. So stick around, because I'm going to show you exactly when this party ends, how to position yourself before it does, and then we're going to do some nice live Q&A as well, because we are live here and we might as well take advantage of that, right? Does that sound good? Does that sound like a plan? If it does sound like a plan, put a 1 in the chat. My name is Felix Prehn. I'm a former investor and banker. I'm also the founder of the Goat Academy, where we've helped over 20,000 students so far decode how Wall Street really works. And what I'm about to share with you today is something most retail investors would honestly never understand until it's behind. You see, I've analyzed every bit of data, weeks of research, and the market right now is not normal. But it also isn't random. Thanks for the ones there, guys. There's a very specific reason the system is holding together. And once you see it, well, you kind of can't unsee it. Now, this isn't a doom and gloom video. I'm not telling you to buy, sell everything, hold cash, or any of that. There is a much smarter way to play that. And that's, of course, thanks to Winston's research about that. So if you want to learn that, if you want to hear that, you know what to do. Smash the you know what. And let me share my screen with you so you get a little more value out of the notes that I prepared for you so that this actually lands, right? So the valuation insanity is this. The Buffett indicator is screaming like, I mean, look at some numbers here. That should probably terrify you. Buffett has a favorite metric for valuing the market. He calls it probably the best single measure of where valuations stand at any given moment. And it basically is quite simple. It takes the total value of all US stocks, and then it divides this by the size of the economy. So it's basically, can I have a pen that isn't black? So it's all stocks divided by GDP, which is just the US economy, right? Now, right now, that ratio sits at 221%, which is pretty extreme. Anything above 100 generally is meant to be overvalued. Now, I think we have some leeway because US companies also sell overseas. You could argue that the economy should maybe take into account some of the, banana republics out there, like, Europe. But if you go back to 1999, we were at 175 to 212%, and everybody was saying, yeah, but this time is different. Right? Because the internet is going to make us all billionaires overnight. So we hit 212. Now we're at 221. And after that bubble burst, the Nasdaq didn't just collapse, it actually went down 77%. Trillions of dollars literally gone. So we've blown past those dot-com bubble peak valuations, and the market keeps climbing. So how does that actually work? Well, look, the total market cap of all US stocks, do we have that data here? Let me put it up. So all US stocks are something like 63 trillion, give or take a few hundred billion. The US economy, including all the services, everything that's produced there, is about 30 trillion. Right? So that's the USA. That's the stock market. Bit of a disconnect, right? Bit of a disconnect, right? Who's a little bit worried about that? Put a W in the chat if you're just a little bit worried about that. Right. Anybody? Does it take into account the deflation of the dollar? I would argue yes. Yes, because it's the economy now, it's the stock market now. Inflation, deflation doesn't really form much part of that. We're going to get onto inflation, by the way, in a second, because that's really an important part to the strategy here. But basically, investors are essentially paying $2 for every $1 of actual economic output. Does that sound sensible? Right? And you can look at other things. You can look at PE ratios. They're even crazier. They're hovering literally at insane levels. But before you panic, I want to offer you one thing here today, which is if you actually want to take your investing game to a different level, and I saw some of you guys in the chat here saying, you know, should you do this? Should you have your stop here? Should you sell this? Should you buy that? You were worried about the market last week. Maybe you're worried right now. All of those are signs that you have a gap. What kind of gap have you got? You've got a skill gap, maybe even a confidence gap. Now, the skill gap will probably fill the confidence gap. And it just means if you're really honest with yourself, you're not 100% sure what you're doing. Given that you spend probably 8 to 10 hours a day earning the money that you bring in, would it not make sense to learn how to make that money work for you so you could be freer? Well, if you're that sort of serious-minded individual, you can hop on a free call with my team at felixfriends.org/freedom. It's literally completely free. There is zero risk. There's zero pressure. I'll put the link in the chat for you as well. And you can have a chat with us to see if the kind of mentoring that we offer, which is mentoring with my mentors, live and one-on-one, who are all Wall Street guys, who are retired investment bankers, hedge fund guys, and so on. And you want to see what I'm looking at in terms of stocks every Sunday, so just before I buy them, I just bought 1 or 2 stocks actually, then, well, you know what to do. You go to felixfriends.org/freedom, you book yourself a risk-free call, like zero cost, but a 45-minute chat or so, and it gives you the chance to ask all the questions that are running around your head right now. Literally all the questions running around your head right now, right? Okay, but let's just move on here quickly through the numbers, and then we get into actionable part. Like, how can you actually benefit from this? Because every risk, every disaster means you can also benefit from it, right? That's just generally speaking how it works. So maybe we should skip ahead a little bit here. So why is the market not crashing with these valuations? Well, I'd argue this is it. Government spending. The money flood. Valuations are insane, and history tells us that crashes happen at these levels. Why haven't we got a crash yet? Well, unprecedented government spending. Let me walk you through the mechanism here. So the US government collects about $5 trillion in tax revenue, right? $5 trillion a year. And that's every year, from your income taxes, your payroll taxes, corporate taxes, you know, the whole thing. And then it turns around and it spends that money on things like Social Security, Medicare, defense, and other programs. Now, that money goes where? Well, back into the economy, right? So picture this. Grandma gets her Social Security check. What does she do? She buys groceries. Money goes to where? Walmart, Kroger. Medicare pays for her healthcare. Money goes into the hospital system, pharmaceutical companies. Defense spending goes to, you know, Lockheed Martin, Raytheon, Boeing, and so on. And government employees get paid, and then they go out and they buy, you know, iPhones. Money goes to Apple, right? So the money ends up back in the pockets of the biggest corporations that dominate the stock market. So it's a circular flow, essentially. But here is where it gets unusual. You might have seen these numbers before. The government isn't just spending the $5 trillion it collects. It's spending literally $1.8 trillion more than it collects. And that's the deficit, right? So it's something like 1.8 trillion last year and this year. So almost 2 trillion being pumped into the economy every single year. Where's that money coming from? Well, it's borrowed. It's sort of borrowed from the future, right? The interest payment for the debt, yeah, that's of course also something there. That's also true. But still, that's about $1 trillion, right? So we're about at close to 7 trillion spending here. About 1 trillion of that goes into interest now, which is insane. And you have things like the infrastructure bill. Where does that go? Well, it goes to construction companies. It goes to equipment manufacturers. You got, you know, the student loan forgiveness madness. Well, the consumers spend more. Now the student loan forgiveness is gone. So now the money is going to flow back to companies like SoFi and other private lenders. And then you get, you know, disaster relief, Ukraine aid. Well, it all circles back. And this happens year after year after year, and it creates artificial demand. It inflates the earnings of companies, and it props up the stock prices. So why is it happening? Well, why don't we just balance the budget? Wouldn't that be the most sensible thing to do? Okay. The US basically controls the world's economy. They're the industrial leader since World War II. They're the tech leader, they're the financial leader, right? Any Americans in the room? Put a USA in the chat there. If you want protection, you play by US rules. If you want access to global finance, global banking, SWIFT network, the biggest stock market, you want an IPO, well, you are nice with the US. Now there are more developing nations, the BRICS nations and so on. They're building their own systems, their own tech. They want to have an alternative to US dominance there. One or two Americans in the room, yeah? And you are living in the greatest economy of the world. Now that threatens the US position at the top. So what's the strategy? Spend. Spend whatever it takes to maintain tech superiority, military superiority, economic superiority, even if it means running massive deficit, even if it means borrowing from future generations. The calculation is basically simple. Staying on top of the world is worth the debt. And as long as that's the plan and the priority, the money printer keeps running in the stock market, well, guess what? It stays inflated. So how do you benefit from that, and how do you protect yourself from that? Well, how is this actually financed? It's basically a hidden tax. You, or my friends who are writing USA in the chat there, you are paying for it. How are you paying for it? Well, this is probably the part the government and Wall Street doesn't really want you to understand, and maybe why our channel gets shut down from time to time. What they do is it devalues the dollar. Imagine this. You live on an island. There are 10 people, and there are 10 coins, right? So 10 coins and 10 very well-drawn people, artist and resident, you can tell, right? So what happens if you change the 10 coins to 20 coins? Let's say they're gold coins. So each coin is very valuable because there are only 10 of them initially. And then what happens? Well, somebody shows up and dumps an extra 10 gold coins on the island. Suddenly there are 20 coins. So what happens to the value of each coin? Tell me, what happens? What happens? Put it in the chat. Right. Well, you're right. It cuts the value of each coin in half. And that's exactly what happens with what the US government is doing to you. So this deficit that nobody cares about does something very, very real. If you go back to 1980s, the dollar was worth I say $100 then was worth $100. This was in 1980. Who was president in 1980? One of the Bush seniors or something? I don't know. You tell me. What happens right now is, well, right now that same dollar is worth about $25. That's that same $100. So the $100 lost 75% of their value just since 1980. That's kind of insane, right? Isn't that kind of insane? Well, it's the hidden engine that keeps the stock market alive. So investors aren't just betting on companies being more productive or innovative, they're just betting on the dollar continuing to lose value. So how does this work from, say you're Apple, your company, you sell an iPhone, and you sell that iPhone today for, $1,000. Say you make $200 profit on that. I don't know what the margin is on Apple, probably a little higher. That's your profit, right? $200. But if inflation and dollar devaluation continue, the next year, the same iPhone, well, what are you going to do? That iPhone price is going to go up. You're going to sell it for $1,100. Right? Your costs go up a bit, but not as much as price. So what happens now? You've increased your profit from $200 to $250. You still with me on that? Big companies like this. They like inflation. Why? Because they can be more profitable. There was one thing during the whole sort of post-COVID inflation. Pepsi. What did they do? They raised their prices by 17%. And they said, oh, it's because of inflation. No, there was no 17% inflation. They just improved their profits. Their profits go up and the consumer sucks it up. And that's why today's insane valuations can be somewhat justified, because they're betting that tomorrow's profits will be much, much higher because of inflation. Is that sinking in? Does that make some sense to you? Does that make some sense? Let me know. Put an S in the chat there if this makes some sense to you. And we're going to take some questions on this in just a second. Now, what does it do? Well, it creates winners and losers. And you have to decide which one you want to be. And it isn't fair, because most of the losers, they don't understand how to do anything about it, and they're probably not in a position to do anything about it. Some of them aren't. But you probably are. That's the good news. Because the money flows from the bottom 90% to the top 90%. That's what happens. Yeah? Okay, thanks for the S's there. Who owns the majority of stocks in America? The top 10% households. The bottom 90%, they own almost nothing at all. They own a bit of cash, and they live paycheck to paycheck. So when the stocks go up because of this crazy devaluation of the dollar, well, the rich get richer. Their assets appreciate, their net worth grows, and the 90%, well, they don't own any stocks. They own the cash that's losing value. Their wages drop because wages don't keep up with inflation. It's not just the groceries, it's the rent, it's the gas, it's the travel, it's everything. So Wall Street celebrates new market highs like we are doing right now. Your regular American will get crushed quietly. Why quietly? Because it doesn't get reported. So the gap between rich and poor stretches every single year. Can you stop it? No, you can't. Try taxation, doesn't work. Try communism, doesn't work. There literally isn't a redistribution method that actually works, because the system will just send the money back to the top 10%. And that maybe is a harsh reality. Maybe you disagree with that. Let me know in the chat. But that's the way I see it. So it's simply a question of how many stocks do you own? Because if the system is designed to benefit the asset owners, while everybody else gets screwed royally, well, you only have one choice. You become one of these guys, right? Who do you want to be? Do you want to be the top 10%? Or do you want to be the bottom 90% and say it's unfair? Harsh choice, but it's the reality. And then you've got to look at, well, what's the big money doing? What's the smart money doing? This guy here, right? Who thinks Warren Buffett is smart? Is he smart? Put smart in the chat. Okay. I think we generally agree that this guy is pretty smart. So what's he doing? Well, his company, Berkshire Hathaway, is sitting on $350 billion in cash. Well, that's what mainstream media likes you to think. Now, that, of course, is nonsense. They don't sit on any cash at all. Yes, it's a lot of money. It isn't in cash. It is in government bonds. And now those government bonds earn them probably, call it 5% interest, risk-free. But on top of that, what's happening right now? What's happening with interest rates? Anybody know? Interest rates, let me just move this to the side a bit. When rates fall, what happens to the value of bonds? It's not very intuitive, but they go up. So they're not just going to make the 5%. They might actually make an extra 20% on the value of those bonds, depending on how long they are. Right? So Buffett is actually fully invested. He's just not fully invested in stocks. He's been selling stocks. Big positions in Apple, Bank of America. He's been piling up, not cash. That's wrong. Next time you see that in mainstream media, just point to it and scream, that's wrong. You're lying to us. And there's a conspiracy theory to that too. Banks like it when you hold cash because they can make money with that money rather than you, right? Now, what's he doing? Well, he's basically preparing for a correction. He knows when the correction comes, it's probably brutal. And he's looking to buy some incredible assets at massive discounts, just like he did after 2008, just like he did after the dot-com crash and so on. So Buffett isn't out there telling people to sell. He's just quietly preparing. He's got his war chest. He's waiting for the inevitable moment when valuations return to a lower level. And that's going to happen. And quite frankly, he isn't alone. Across Wall Street, you're seeing a lot of very similar patterns. You see hedge funds. You see they're reducing their stock exposure. You see private equity raising cash because they're waiting for something to be cheaper. You see institution adding more protection, more hedges. So what does that mean for you? Look, they're not predicting the exact date of a crash. Nobody can. It's ludicrous to say you can. But they're recognizing that the risk reward is, well, it's getting a little dodgy. And the smart money is preparing at least some of their portfolio to look for the next big opportunities. Now, am I telling you that you should be in cash? What do you think? Who thinks I'm telling you to be in cash? Anybody? Well, I hope you understand that I'm not. Quite the opposite. Now, no. Okay, good, good. So you have two options. If you stay in cash, you are guaranteed to lose money. 100% done deal. Why? Because there is inflation. They're going to print more money, right? And they might do that through money printing, through stable coins, all sorts of shenanigans, which is basically just outsourcing the money printing to the banks. So you have two options. You stay in cash, you're definitely going to lose. You're guaranteed to lose money. Right? Every year that, say, $100,000 is in your saving account, well, you're going to lose. I mean, the government tells you it's 3 to 5%. I think it's a lot more than that. I think it's probably closer to 8 to 10% a year because they manipulate the data. And you stay invested. It's your second option. But now you're feeling a bit queasy about this market, right? Look, when valuations are this extreme, we could get a big drawdown. But I think the market's going to go a lot higher. So you are in this sort of trap. Which way do I go? Well, there is a way you can actually deal with this. I am almost fully invested right now. Well, because I bought a bunch of stuff today. I buy stuff every week, really. And what are we doing right now? We're more selective than ever. I'm not buying most of the stuff in the headlines. Like one of the things I bought today was I bought more Victoria's Secret, VSCO ticker. Not exactly the latest AI stock, right? What else did I buy today? I bought some Estee Lauder today. Again, not exactly the latest AI stock, right? I have been buying gold stocks, right? We've been looking at pot stocks, for lack of a better word. Not a lot of semiconductors, quite frankly. We've been looking at biotech, which has had some really beautiful gains. We've been looking at, uranium. We've been looking at rare earths. There have been some really, really nice plays here the last few months. But we're not just loading up blindly on NVIDIA. Right? So if you understand that strategy and you diversify intelligently and smartly, and you follow the money, I think we're going to have a beautiful end to the year. I think we're going to have a beautiful 2026. But at some point, there will be disappointment around AI earnings, NVIDIA's or Broadcom's or Oracle's or something. We're already starting to see that. When that comes in, you might see a massive correction, a massive pullback. So how do you deal with that? Well, you've got to learn how to manage your risk. And you got to learn how to automate that. We did run a whole live session on that this morning, actually. Was it this morning? Yeah, my time was this morning. It was like probably your last night. And what I'm saying to you here is basically prepare yourself. When the sun shines, when the market is beautiful, when everybody's had a tremendous year and maybe even 2 or 3 tremendous years, and I very much wish that you have, you think you're a genius. I always say to my students, and they write to me a lot, and they say, I'm up, X percent, and I made 70%, 100%, whatever. And what's my reply always? It's always, congratulations. You should take credit for that. And secondly, this is the highest risk moment. Overconfidence is going to creep in. And unless you really, really knuckle down on your risk management, you're going to give it all back. Because it's happened to me many times. And I learned from it. I did it quite a few times. And I just thought, yeah, but I'm smarter, I'm better. This time is different. And I just took more and more and more risk. Don't do that. The better you do, the more you want to look at the risk you're taking. The more you want to structure that, automate that. You don't want to knuckle down on the same theme, the same sector again and again and again. Because there is one thing in the market that drives a lot of this, and it's called luck. And some people don't like the word because they think there's something negative about it because it means they don't deserve it. No, you deserve luck. But a lot of the time, we're lucky. Right? Now, we can improve our likelihood of being lucky by showing up and by following the rules and by making sure we have no big losses and by letting our winners run and following essentially Wall Street's rules, which is what we teach. But there's still been an element of luck. It's pretty hard to lose money in a year where everything is up, 20% or 25% or something, right? Pretty hard. But it's much harder to keep that money because you're going to take more and more and more risk. So what would I say to you? Should you diversify internationally? Should you buy real estate? Look, there's tons of stuff you can do, but there's a much easier thing within the stock market. You don't have to build a bond portfolio or something crazy. You can literally just be a bit smarter about what you're in, right? So how do we know the crash is coming? How do we know when it's coming? Well, nobody knows when it's coming. Nobody knows exactly when it's coming. You can look, however, on the chart and you can avoid the moments when the risk kicks in. And that's what we do, right? So there are certain triggers we can look at that have more or less impact on the market. And I'm going to take a screenshot of this if you want. We're going to get Fed rate cuts, more likely. Hikes or cuts. Both have a moderate impact on the market. Is the US going to cut its spending? It's a bit like, politicians, they want to give away the sweets. It makes them popular. They don't really care. They're mostly quite old, right? Are we going to get a real recession? Well, it's pretty hard to get a real recession when the government is spending $7 trillion. So I also don't think that's going to happen. Black swan events. Yeah, that's always a possibility. Some sort of shock, some financial crisis, some unexpected disaster. You wake up in the morning and Bank of America has gone broke or, something like that. Or the internet's down or, something. I mean, did you notice that yesterday, last 2 days? Amazon Web Services, literally the biggest cloud computing platform in the world, had an outage for a lot of their servers, right? A lot of things were down. Zoom was down. Some of our communities were down for a little while. But really what happens is something along this line happens that shakes confidence. I think it's more likely something to do with AI spending, where somebody cancels their $300 billion order because it was always made up anyway. And you then lose confidence. And what happens then is, well, the dip buyers are gone, everyone runs for the hills, and suddenly you're down pretty significantly. And what you need to understand in that moment is that that's actually opportunity. Look at some of these data points. 2008, 2009, the S&P fell 57%. Over the next 10 years, what happened? We went up 400%. COVID, we dropped 35%. Pretty nice run up since then. But if you go back a little further, even .com crash, we dropped 77%. Right? But what did we get? Well, we got Amazon. We got Apple. Right? We got some really brilliant businesses that came out of that. If you'd invested those, you would have made tens of thousands of percent. So what's my recommendation? Look, research, understand, hone your skills. Investing is a set of skills. It is not finding the latest treasure. It is a set of skills which allow you to find 10, 20, 30 opportunities any given day. Like, I find more stocks that I want to buy than I could ever buy. Make sure the emotional part is taken out And you can do that through automations, again, something we teach. And learn. That's really the biggest thing you can do. When the market's doing really well, you have an incentive to learn because you're now enjoying it. Because when the market drops, you stop enjoying it and you don't want to learn anymore, right? But just sort of the weird way of looking at it, but it's actually true. So final takeaways, and let me take some questions on this, my friends. We're insanely overvalued right now. My feeling is we're going to go much higher, but that's just a feeling. I haven't got a crystal ball because the government's spending so much money. We definitely have massive inflation. So if you're not invested, you will definitely lose. And the smart money, everyone says they're in cash. They're not actually in cash. They're in bonds because they understand the bond market. And what I'd say to you is manage the risk, use the rallies to maybe pare back some of those risks on some of those stocks that look tired, because there are plenty of stocks out there looking tired right now. But there are still some really, really beautiful opportunities from some stocks that haven't necessarily done all that much. I'll show you one or two in a second. And if you want to just take this to another level, be serious about this and actually sit down with some investment bankers who happen to be my mentors and learn rules, right? And yes, you also get to see all the stocks I look at every week. Then book yourself a call. It's free. felixprehn.org/freedom. Let me know whether you're going to do that in the chat. Just write call in the chat and I see it. And thanks for the 500 likes, guys. 3,000 people live. That's very cool. And should we take some questions? Let's take some questions. So write your questions in the chat. When we do that, I show you why I bought Victoria's Secret. Because this stock hasn't exactly done very well. That's actually one of the reasons. Not in itself another reason. The other bit is technical, which is basically we look for, second time I just bought this, we look for exactly this zigzag pattern. We want to break out of that. That purple line there is the 150-day moving average line. And this is obviously a bit quick, but we want to be above that. So that happened here, right? Here. And volume kicked in. Moving averages started moving up. So that was my first buy. And then this just here up there was my second buy. Right? Again, don't run out and buy it blindly, because if you don't understand the whys, you won't understand when to sell. And what's the plan with that? Do I have a target of profit? No, I never do. I have a system that'll take profits. But I think, some sort of significant gain is possible here, which is why I'm looking at this. And I would only look at this if that was the case. In fact, if they keep executing the way they seem to be at the moment, then I think potentially there is a much bigger gain in here. Right? You see the point if we go back to 2021 highs. And again, I'm not promising you that. Here's another one. If we're allowed to load it up. Again, it's the latest AI company. They just invented the super chip. No, of course not. It's just they make lipsticks and things. Any women on the chat here? You have any Estee Lauder products? So this thing collapsed tremendously, about 80-90% down. And I don't want to own it when it's collapsing. But what is it doing right now? Well, it seems to be recovering. And what do we have? We have the famous heartbeat pattern, right? Something like that. And then we did a little bit of this here. That was also a nice pattern. So we broke out of this here. And that's why I like it. Earnings are coming up, so obviously you got to wait out for that. But yeah, they basically cocked up massively on the whole China demand shift, and that lost them a lot of money. At some point, companies get forgiven for that. And upside potential, well, if they just recover to, say 2023 levels, we're potentially sitting on a pretty nice gold mine there, right? And I like it because the stock hasn't done well this year. It hasn't done well in recent years. And therefore it isn't some overpriced, AI thingy-majiggy. So it's an opportunity that's a bit more conservative, and I'm being quite selective at the moment with the things that I buy. Now, you got some value out of that. Imagine the value you'd get if you were actually on a call with a real investment banker, maybe once a week or even more than that. And you could watch us every day, literally live, comment on the market, talk about the market. You can ask us questions and you can see exactly what's going on there. In which case, do what Steve has just done. Book a call. Alrighty, let's take some questions here then. old woman's lipstick, says Nico. Yes, you're probably not the target customer, though, are you? They make a nice moisturizer, says Step. Do you buy gold and silver? I like gold and silver. We've had a tremendous run with gold and silver, mostly through miners. And look, I mean, bought it at $4 and it's now at $5.20. It was at $6, so yeah, a bit of a gap down there. But it's actually recovering quite nicely yesterday. And it looks like it's recovering quite nicely today. So am I upset about the drip? No, it's just part of the equation of being in something like this. The more something goes up, typically the more volatile it becomes. So I'm not concerned about the gold dip, to be honest with you, nor am I concerned about the silver dip. If you don't like drops that size, the gold has always been very, very, very volatile. People always say, oh, it's stable and safe. Bollocks. It's a very volatile thing. And it's had a tremendous run up. It's made us a lot of money this year. Whether you hold the thing physically or through an ETF or the gold miners, which is essentially a leverage play on that, which is why I like them, then, yeah, it's been pretty hard not to make money this year. Now, do you want to buy the dip? That really depends on your overall risk management. I think there is some temptation there to do that. But yeah, I'm quite happy about this, to be honest with you. Very happy about it. I was actually waiting. And I've been saying this again for, if you watch some of my videos, for probably a month or so. I'm saying I think there will be a pullback on gold at some point. Got the pullback on gold. So if you're bullish on gold, which I am, then, you know, you kind of got to enjoy these moments, right? Why am I bullish on gold? I can't remember the exact number. We did a video on that a while back. I think China is buying something like $60 billion per month of gold. It's pretty significant. And I bet you India and Indonesia and every other, you know, sort of developing country is doing the same thing. And why are they doing that? Because of Russia. The US and Europe has stolen Russia's gold. And not gold, sorry, their foreign exchange holdings. So normally what happened is that, say you're a country like Russia, and say the US, and say the UK, right? You got Russia will own some dollars, right? The US, I don't know if they own any ruble, maybe they do own some ruble, so you store that in a Russian bank. The UK will own some US dollars. The Russia will also own some pounds, which will sit in some British bank. Now, what happened is that the US and the UK and Europe, they decided, we don't like the Russians. We don't like what they're doing in Ukraine. So we're taking their dollars and we're confiscating, we're stealing them. It's literally what it is, stealing them, right? And maybe you think it's justified, but it's still theft. So if you're any other country, you're like, hang on a moment. If I own dollars and people don't like me anymore, they can steal my money. So what am I going to do? I'm not going to own any dollars or any pounds or any euros. I'm going to buy gold and I'm going to put it into my own safe and vault. That's what's driving the gold mania. And I think it's going to last. I think it's going to go on for years. So I'm quite liking this stream. Does that make some sense? And then the other part, of course, is inflation. Again, inflation makes gold go up very significantly. So Neil has a lot of money to invest. What should Neil do? Should Neil wait? There is a lovely quote from Peter Thiel. No, not Peter Thiel. Peter, what's his name? People with books lying around here. Can't think of the name. Let's think of the Wall Street investor guy. Anyway, the quote is as follows. I'll type it for you because my handwriting is always abysmal. More money has been lost waiting for the crash than in all the crashes combined. Paraphrasing slightly. So what you want to do, my friend, is you want to make a plan. You don't just want to run out and buy stuff randomly. You want to have a plan. And the plan is going to be like, what's your time horizon, right? What do you want to do with the money? What return do you want? Do you want to get an income from it or not? You got to understand all those things. And then you're going to want to diversify that money into a couple of things. Now, if that sounds like too much work for you, well, you could just buy the S&P. And if you think, oh, if I buy it all now, what if it crashes? Well, in the long run, that doesn't actually matter. But psychologically, what you could do is you could split it out over a certain number of months or something like that. And that way, it would feel better emotionally. Statistically, it actually makes bugger all difference, but it feels better. And often that's therefore a good thing to do. Peter Lynch, that's the one. Yeah, that's the one. Thank you very much, guys. Magdalene Lynch, that's the one. Peter Rabbit, yes, him too. Eden is a 20-year-old who makes very little money, but you have most of it in high-risk stocks. What should you do? Well, first of all, you're 20 years old. You have no excuse for making very little money. Not what you wanted to hear, right? Why are you making very little money, Peter? There is really no reason to make very little money if you're 20 years old. I know 20 years old people who are making hundreds of thousands of dollars building software. So I don't know what you're doing, but you might want to change what you're doing. The second part is, do you actually have a plan? Maybe you want to stop working at some point. Maybe you want to just be able to live over it. Maybe you want to have a safety net. You want to buy a house. You want to start a family, whatever it is you want to be doing. So can you take more risk as a 20-year-old? Yes, because you have a longer period of time to uncock it up, if you know what I mean. Yeah. Now, what would I say to you? Basically the same thing I say to everybody. Learn. It's as simple as that. Just learn how to become a great investor. It's not hard. It's just a bunch of rules. There are like 3 of them, essentially. It really isn't a difficult thing to do. And once you have those skills, you will then know what to do with the money. Because it sounds like you are working hard, or even though you make very little money. And how should I diversify my holdings? Well, you might want to start putting some of your new money, at least, into something a bit more sensible. You know, things that you currently hold, you might want to start putting some stops. So when those stocks come down, you take those gains. I'm not saying you shouldn't take any risk. If you take no risk, you make no money. But you're saying to me that they're all very high-risk stocks. I don't know what they are. So you'd have to have a chat with that. That's exactly the sort of thing that we do, by the way, with our students. Maybe that isn't for you, my friend, but people who are a bit more conservative, more serious about this, certainly is. Stop losses are for those who want out. Stop losses are for those who don't want to give their gains back to Wall Street. It's not a stop loss. I call it a profit lock. It allows you to not lose your shirt, right? And you got to set that somewhere. So say I'm in this thing. My first stop was probably down here, and then I'm pretty lax with this one. I probably moved it to there, and then I probably moved it to, I don't know where it is right now, but to be honest with you, it might actually be all the way down here. And what does that mean? It means that if gold decides to collapse, well, I'll still make money. Not as much as I'd like on this one, but it's a short period of time. It's not bad to make 15% in 39 days. That's the worst case outcome. Or if it recovers back up, we make a lot more money. So the praying and the wishing and the hoping isn't really going to make you wealthy, because you really just want to. It's a very simple rule. Buy what Wall Street is buying. That's really all it is. Or you could sum it up as follow the money. That's basically what we do, because you do not have enough money to move the market, but Wall Street does. So why not just piggyback on their things? Right? How can you tell where they're putting their money? Well, just watch the industries, watch the sectors, and you can see it every single day. The data is public, it's out there, it's live, right? Keep your powder dry, oil about to rise. Dark pool data, yeah, that can be also a useful bit on top. So in Trade Vision here, you can see live on the right here what the dark pool guys are doing. And there's a link to Trade Vision. I'll put it in the chat for you here as well. There it is. And you can literally see every day where the money is flowing. It's also not a little nice little tool here, right? To see where the money is leaving, where the money is flowing, and you can see that literally live. So today is Wednesday, and you can see the latest data there, right? And that'll keep coming in through the day. You can see the actual trades even. The market isn't open yet, so we have to look at yesterday. And then you can see here, I've got some filters on here. And yeah, I'm just looking at shop, but you can look at any stock basically, and you can see what's going on here. You can look at the most unusual trades, right? Unusual trades are quite an interesting one sometimes. We're thinking about creating some sort of notification for that as well. But yeah, you can see what's going on there. Or you can just be like, okay, what about I'm a Tesla shareholder or something. You want to know if there's something big going on in Tesla. Well, why not look at the big unusual trades? Or why not just look at them basically live as they come in? Now, that will be a few hours ago now, but it'll be a few minutes, you know, as the market opens up. Yeah, the market is open, but nobody's placed a sizable Tesla trade yet. So I don't know when they will. Right? Actually, Wednesday. Okay, sorry. Here we go. Look, a minute. I was on the wrong day. You're quite right. A minute ago, 3 minutes ago, 4 minutes ago, you can see the trades as they're coming in. Now, these are not that unusual. Nothing unusual has really happened yet today on this one, but it's a pretty good indicator. So you want to get your pause on that one, felixprehn.org/Trade Vision. There's a link down below. It's also in the description. It's also in the chat. I just put it in there. But honestly, none of the data in the world will make you whole if you don't know what to do with the data. The data is only as useful as what you do with it. And what you do with it, well, it depends really just on your skill set. You want to level your skill set, find yourself a mentor. It doesn't have to be us, but if you want to have a chat about it, go to felixprehn.org/freedom. And we give you the opportunity to actually have like a 45-minute conversation with us, ask us all the questions and see whether or not learning from a bunch of retired investment bankers might be the right move for you. Now we look at the heat map here live. What do you see? Netflix is tanking. Medical equipment is doing quite nicely. Petroleum is doing quite nicely. Transportation is doing quite nicely. The rest so. Right? So tech stocks are pulling back a little bit here. If you look at them by market cap, nothing terrible happening there. Google is up a bit. Some of the semis are pulling back quite hard. Texas Instruments there, 8%. Netflix, that's a pretty big drop. So the market's getting a bit iffy because what we talked about earlier, we are at pretty elevated valuations, right? You want to filter by volume. Interesting. Netflix. Yeah, maybe everybody's canceling their Netflix. That's a good idea, by the way. Uranium sector. I'm quite happy about the uranium sector. I mean, if you look at something like, again, look at the index, URA. Yeah, it's pulling back a bit. But zoom the F out, Entry point was down here, and we're up 71%. We're up 100%. So yeah, maybe your stops should have kicked in. But it looks actually like we're recovering a bit today. So what happens to any stock in a rally? Well, guess what? It retests. Even broke through the 50-day moving average, retested again, retested again. And those retests created a lot of value, a lot of confidence. you basically got an upside down, head and shoulder pattern there, which is very bullish. And what happened? Well, we went very, very, very bullishly up, right? So that was a beautiful entry point. So if you believe that the US is going to build 400 megawatt hours or whatever that is of nuclear reactors, and China is building them faster than anybody else, then the demand for uranium, especially in the US, is going to keep going through the roof, right? So am I particularly concerned that stocks like you have pulled back? No, I smile on it. Because I think it's a wonderful thing. It's exactly what we wanted. We wanted this to pull back a little bit more so we could accumulate some more. I'm not telling you to buy it. I'm just saying that's one way of looking at it. Netflix is not very entertaining. No, it's completely, honestly, it just destroys your brain cells one at a time. That's what I said. Chris wants to know, should I have sold my MP materials by now? Chris, the fact that you're in a stock and you don't know where to sell it, yes, it makes you human. Yes, it makes you like 99% of other investors, but it also makes you into somebody who's unlikely to be successful in the long run. That's just the truth. Right? So you're hoping and praying and wishing that I'm going to answer your question or somebody else will, and that I happen to be right. Well, not much of a system, is it? How do you replicate that success, even if it were a success, which apparently it isn't for you, right? So you just need to learn the freaking rules. You need to find somebody to learn it from. That's the only way to do it. Can you read all the books you want? I've got lots of books back there. Bloody useless, most of them. Put your stops in when you buy, KC, precisely. How do you get started with very little money? Make some more money, Ray. Is it Ray or Roy? Ray. Again, not what you want to hear, right? It's not a popularity contest, this. It's just honest. It's just honest. People will come and say, oh, I've only got very little money. Like, why have you got very little money? Don't earn very much. Well, why not get a better job? Why not do something online? If you live in an area where salaries suck, work online. Pretty much actually anybody work online. Maybe your expenses are very high. You can move somewhere where it's cheaper and you can work online. We've got people online. We pay them a lot of money. $400, $500 an hour because they're good. Right? I've got mentors I paid $1,500 an hour to, sometimes more. And was it worth it? Yeah. I got value. Right? So where were they sitting? In a beach house somewhere. You know what I mean? So you have a lot more options than anybody had ever. So there really is no excuse to, I don't know, I've got a little money. But if you want to know where to start, that's a great thing to do. Check out our educational videos. There's tons of free courses in there and everything else. That's a good place to start. It's a good place to start. And it's good to start. I mean, I don't want to bag on you. I'm just saying this whole money excuse, it's a choice for most people. And the fact that you're here and you got Wi-Fi and internet and time at 10 a.m. New York time means you're probably somebody who's got all the opportunities in the world on their doorstep. So you just got to grab them. And if you do, good stuff happens. Fun stuff happens. Open an OnlyFans account. Yeah, that's an opportunity. Not one I would suggest. I think OnlyFans is a horrible, corrupting influence. I can't believe these kind of companies are allowed to list on the stock exchange. I think there should be moral outrage, honestly. And I'm not some sort of, religious fervor kind of type person, but I just think we've just lost all sense of civility and morality, and it just shouldn't be out there. I mean, they always wear strip clubs and that sort of thing, and they used to list as restaurant businesses, but this is taking it to a whole nother level. It's just turning the world into a strip club. It's a terrible thing. How do I get your free videos, Thomas? Free videos. You're on YouTube, my friend, Thomas. It's free. Is that what you mean? Or there's an educational playlist on the channel. You can check that out. Tons of stuff in there. Doing it. I would drive you nuts. You have no debts. That's a very good thing. Invest in retirement. Only 5K to invest. Late start. Look, a late start is always better than no start. So I'm not bagging on you. I'm just saying Really, really focus on it. If you're starting later, well, then today is your day. Today is your lucky day where you can start and you can make up for the lost time. If you're 20 years old, like the chap earlier, it's a lot easier, right? But most of us, I mean, I wasted 10, 15 years not really investing properly, and I had no excuse. And it's just, oh, I'll do it later when I have a bit more money, when I have a bit more time, and I'm not as busy working on this nonsense, right? I've got people in my family saying this stuff to me. Oh, I just haven't got time for that. I'm like, go figure why you haven't got time. So take action, my friend. You owe it to yourself. All right. Anything else, my friends? Here, what's a trade halt? Stocks get the trading gets stopped when a stock tanks 15% or something like that. It's sort of meant to kind of calm the nerves. That's why it happens. Best time to plant the trees a year ago. The second best time is today, Scott. Precisely. Precisely. Casey, you emailed me. Yeah, do resend it. I mean, I do read all the emails. We go through everything, but occasionally might miss something. We all need a kick in the ass sometimes, Marco. Absolutely. And I've had people kick me pretty harshly over the years. And in hindsight, I'm very, very grateful for them, because sometimes, you know, most people don't tell you the truth, right? Most people are just nice and they just say, oh, it's all right, just do your best. No, don't do your best. If your best isn't good enough, that isn't good enough. Go and find somebody else you can learn from and then do his or her best. And that way you can get there faster. So I think this whole, like, I've got a lovely goddaughter, very, very sweet girl. And I went to her gymnastics performance. Very cute. They're all sort of, you know, doing cartwheels and that kind of thing. And she's very good. She's actually very good and insanely fit. And some of the other students were terrible. I mean, terrible. Just rolling around, right? Total mess. You know what happens at the end of this competition? Everybody gets the same certificate. What the heck is that all about? What is that teaching them? That you can be rubbish and not try and not put in the effort and you still win? No, you don't. Life doesn't work that way. Right? Yeah, you got to put in the effort, but you got to get good at it. And investing is just something you can get good at. It's just a rules-based thing. That's really all it is. You can learn the rules. Question is whether you'll do it. Teaching them to be losers. Yeah, you know what? I think that's the plan. I think it's intentional. They want them to be, you know, frustrated, and then they're going to say they've got ADHD, and then they can put them on medication for the rest of their life or something. You're not going to be happy if you're never good at anything. It's a miserable way to live, right? And nobody's good at everything. I suck at many things, but money and investing is just not really something that you have the luxury of sucking at, because it makes your life very difficult. So anybody can learn that it isn't rocket science. It's like, really isn't difficult. It just requires somebody to teach it to you. That's really all it is. So you want to learn how to do that, you know what to do, right? There's a link in the chat. I'll put it in there for you one more time, felixfriends.org/freedom, and you can book a free call, have a chat with us. Do you hold broad ETFs forever? I do, yes. I do, actually. I do that with some of my money. Keeps the family calm and sweet. That's really the only reason I do it. And yeah, just add to that blindly. Just keep adding to that, and it'll just grow, compound over time. What's the biggest lesson you learned through your investing career, says Michael? Biggest lesson, I think, don't be too proud to ask for help. And just because you had a good month, quarter, year, doesn't mean you've now magically cracked it. I think being humble is probably the best thing. And the greatest mentors I've had, the greatest traders I've learned from, they're always very humble. And they just sort of say, yeah, but a very good run. I'm very lucky. I'm very fortunate. But they sort of say a lot of this was also just down to timing and luck and you know, being in the right place and so on. And I think there is an element to that. But I think really what they're saying is, I know there are people out there who are better than me. I've made a lot of mistakes. And the real win isn't not making mistakes. It's okay to make mistakes. We all make mistakes. It's how you deal with them. and stick your head in the sand. That's what most of us want to do. We just want to be like, oh, this is down 20%. Let's just forget about it. Don't go back up. And that's what costs you years of your retirement or just a better life. So facing the demons head on and being humble. I think that's really the way I would look at it, and just ask for help. Like, just ask for help. There is no magic moment where you will realize how this works, because the market is not logical. It is not designed for you to win. It's designed for them to win. And therefore, the only way, in my humble opinion, to win in it consistently, or at least more consistently, is to play by their rules. For that, you need to know their rules. Scott, my friend, nice to see you live. Felix has a very deep learning video in his YouTube playlist. Yeah, there's a lot of stuff out there, right? We're putting a lot of stuff out there, which is really, really good. Where is the bell? Okay, let me see. Any other questions, my friends? KC says, East Allenbrook Core. Give Hugh a hug from me. Hugh's actually limping. He twisted his little paw. Yes. So we've got these cats, right? I adopted 2 kittens. They were about a year old. They were meant to get desexed. They were 6 months or something. Meant to get desexed on a Monday. I went away for like the 3 days before and came back, and they were apparently pregnant. My housekeeper maintains to this day that there was no noise and there was no way of telling it. I'm like, right, I think you just wanted kittens. They're now all desexed, but we have 5 bonus kittens now, and 2 of them are boys. And they keep falling off things, and they keep like twisting their elbows and knees and joints and stuff. So boy cats are apparently about as idiotic as little boys. I used to always have a cask on me or break something, so they're doing the same thing, but they are very sweet. They're just feeling a little bit sorry for themselves today. Evans, you're basically saying you're getting kicked out with stops before they get into profit. You're setting your stops wrong. You are probably underestimating the risk of those stocks that you're in, and you're setting your stops too tight. That would be the first thing. The second thing is what I would look at is how big are your positions? Because if it concerns you, it's probably too big. Those would be the 2 things I would tackle first. D6, that's what the kids are doing. Yeah, I think that's not quite the same thing. There are too many cats in this world, and I think it's the responsible thing to do. They're all street cats. They're all adopted. I think we've got plenty of cats right now. So I think it's a little different. We're not, identifying them as female suddenly or something. How are your handstands coming along? I actually did a session today. It was very good. Still not up there all that long, but up there a lot more than I used to be. Today we did, after handstands, we did wall walks, which was an evil thing to do, but strengthens your shoulders quite a lot. So I literally have a coach to learn how to do handstands. I never could as a child. Now I can for a certain period of time, which is quite satisfying. It's also very healthy. Stop profit is the best thing you have to learn how to embrace, says Scott. Yeah, that's a good phrase for it as well. Adopt, don't shop. Exactly. For cats and dogs, they're free. Reaction to mining stocks. Healthy pullback. That's the way I look at it. We're kind of expecting a pullback in gold. I was actually quite surprised how long it's going up in a straight line, but I'm still very bullish on it in the longer term. That's just my personal opinion. Are you still drinking gag juice? Yes, although I've just run out. I need to order some. Just try to book an appointment. The available times are not UK friendly, says WhatsApp. Okay, that's a great point, my friend. I will. Do you want to drop me an email and we can fix that up for you? Because I'm sure we can fix that for you. Let me share my screen with you again. 1 second here. I'm going to put my email on the screen here, and you can drop me a line and just say you're in the UK, and we'll fix that for you. Felix at Goat Academy.org. It's probably just that you Brits were too quick. But yeah, just drop me an email there. I'll also put it in the chat so you can copy and paste it. Maybe that's easier. There it is. Let me get back to you. Why do you live in Hong Kong? It's a beautiful place. It's a beautiful place. If you haven't been, I'd recommend it. The way I would describe it is take Manhattan, remove the crazies and the dirt and the crime, and then put it into the tropics with mountains and beaches, and you got Hong Kong. Lovely people too. Very safe. Very nice place. I really enjoy it. I love living in Asia most of the year. We're in Europe for a bit of the year, in the UK for a bit of the year, but mostly I'm sort of mostly here. It's just an amazing part of the world where a lot of things still work. This was fun. Dubai friendly times also. Yeah, just drop me an email at the same email address, felix@goatacademy.org. And I'm also happy to, of course, we'll sort that out for you. It's probably just a question of just spots are taken or something. I'm sure we can make something available for you. Do your fans visit you in Hong Kong? Yes. Some of you guys come and say, hey, I'm here. And yeah, absolutely. I keep bumping into you as well. Tax friendly. It is. There are more tax friendly places in fairness, but it is pretty tax friendly. Jacqueline, you're also from Hong Kong. Fantastic. Regular lives. Well, let's see how this one goes. I think that's one. I think honestly, one reason is, look, my goal is to reach as many people as possible so we can have an impact on as many people as possible. And what I'm finding is that the live streams get a certain number of views. We put at the same time out a video, it'll get double or triple the views. So we reach a lot more people. So we reached about 3 times more people last month not doing live streams than doing the live streams. So you kind of go figure, like, what is better for people overall? I enjoy the live streams, as you can hopefully tell, but it doesn't seem to make sense for some reason. Kind of makes sense, actually. If you don't really know who the heck I am, you don't really want to listen to me drivel on and answer questions for an hour. Sort of get that. But I do also enjoy them. So we'll try to figure something out. We'll just test stuff and so on. And ultimately, the popularity, the reach, which we can see in numbers, will determine what we'll keep doing. Steve, you're in Manila? Yeah, I'm going to Manila in 2 weeks, I think, something like that. I go to the Philippines quite a lot, actually. Got some great friends there. Pierre, you're on Llama Island. Okay, I can see you then. All right, my friends. So I love that there's still 2,500 people live here. Absolutely tremendous. Only 800 of you found it appropriate to smash the like button. So to the rest of you, you know what I'm saying. And if you got some value out of today, seriously, just book a call. It's the freest thing. It's the risk-freest thing you can do. You learn something from it. We happily share you some free resources with you as well. That's just as a bonus. But ultimately, you need to find a path to where investing becomes something you are good at and you're confident at. And once you get to that place, I can tell you from my experience, life gets a heck of a lot easier. So there's a link down below, felixprehn.org/freedom. My hope is that it gets you to your freedom. And I wish you a beautiful rest of your day and lots of luck. You're going to need it if you haven't got rules. And for those of you guys who got rules, you no longer need the